Stocks soar after temporary tariff reduction between U.S. China. U.S. stocks soared Monday as the Dow rose 2.8%, closing at 42,410, surpassing its April 2nd level. The S&P 500 increased by 3.26%, and the Nasdaq surged 4.3%, marking a new bull market by closing 20% above its April low. This rally was fueled by optimism following a temporary trade deal between the U.S. and China. The world's largest economies, the U.S. and China, reached a temporary trade pact to significantly lower tariffs while continuing negotiations. Announced on Monday morning, the agreement includes cutting tariffs on imports by May 14th. The U.S. will reduce its tariffs on China from 145% to 30%, while the two nations continue to talk. China will cut its levies on U.S. imports from 125% to 10%, according to a joint statement from the two nations. In 2024, the U.S. goods trade deficit with China reached a substantial $295.4 billion, marking the largest deficit with any trading partner. This significant figure underscores ongoing trade challenges between the two nations, despite efforts to negotiate and adjust trade policies. However, he emphasized that despite the agreement, current tariff levels remain higher than at the year's start, which continues to affect small businesses adversely. Furthermore, they stressed the necessity of opening Chinese markets for U.S. manufacturers and addressing national security concerns. Economists, businesses, and many publicly traded companies have warned that tariffs could raise prices on a wide range of consumer products. Trump has said he wants to use tariffs to restore manufacturing jobs lost to lower-wage countries in decades past, shift the tax burden away from U.S. families, and pay down the national debt. A tariff is a tax on imported goods. The importer pays the tax and can either absorb the loss or pass the cost on to consumers through higher prices.